Today's video is all about MICROVISIONCHAIN, MVC, the blockchain for Web3, Bitcoin plus smart contracts plus decentralized ID and scalability. Today's video is all about MVC. We're going to be doing a deep dive into the fundamentals. We're going to be looking at some of the value propositions that this project offers as an investor. So you know what? Let's get right into it. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities, guys. And we definitely do have opportunities right now. In today's video, I want to be talking about MVC. It is a blockchain. It is a project that many individuals are talking about just lately, and there's a little bit of hype backing up this movement with MVC. And I definitely want to take a look at what it is all about, guys. It's very important that we become very fundamentally bullish in this sideways price action, in this potential, accumulation phase that we are in this bear market. We should be looking at some of these projects, obviously, with a very, very, fine-tooth comb and, microscope, whatever you want to call it. We need to get into the details here, guys, so that we can be very bullish here. We're buying in with new projects with not much, price action looking left. And the issue is, what else do we base our decisions on? Fundamentals. Okay, so that's what I want to do today. We're going to be looking at a deep dive into this project, and let's begin. Let's begin by looking at the website. We'll scroll through some of the pages. We'll go through some of the ideas that he got here, and then we'll, finally conclude what we think about this project. Is it worthy of our capital? Should we be buying in? All right, let's begin. MVC blockchain for the web. I think that's a big, bold statement. A lot to offer here, and you can see plus. That means that it's biting off quite a bit, which, fine. Let's see how it tries to tackle it, how MVC works, and enter the Web3 era, join MVC community. Of course, the ticker is space. It's not MVC. The ticker is space. So make sure you note that down. Why MVC? High performance, low fees. That's very important. Low fees. Layer 1 decentralized identity. So it is a layer 1, and it boasts itself based on decentralization and basically keeping in tune with blockchain and what it has to offer with regards to privacy and all that kind of stuff with regards to decentralization. It's one of the value propositions behind blockchain in general. Smart contract, UTXO, sometimes referred to just UTX model. Guys, this is a very important thing, a very, very important thing. We might as well tackle this as we are right here, right? UTX is a very important model. It is the model that Bitcoin uses and many other forks of Bitcoin, right? Meaning Litecoin, Monero, and there are others that use the UTX model. And this model is basically a very secure model. It's a model that, of course, promotes decentralization, and it follows along Bitcoin's lead, its architecture. So this is a very bullish thing because there are not many layer 1s that offer, let's see if we can go back to it, smart contracts on UTX, right? Right now, all the UTX modeled blockchains are just basically cryptocurrencies, Litecoin and Monero, for example, right? And Bitcoin, of course, right? So this is an important thing. Like, we have to be aware that there is that Bitcoin narrative, that people are looking at with regards to building contracts, smart contracts onto the Bitcoin mechanism, where we have projects like Stacks, or we can even think about ordinals, and ordinals in itself use blockchain, right? Shards of Bitcoin in order to track transactions. But this is very different here. And what I think what they're trying to do is MVC is basically trying to tackle the issues that ordinals have. Obviously, the congestion that ordinals, give the Bitcoin blockchain. Bitcoin wasn't created to basically host smart contracts. So MVC basically, what it does, it takes the idea to the next level and finds a solution to that ordinal problem, allowing a layer, let's call it a layer 2, because it's not a layer 2, it's a layer 1. But if you think about it, it's almost like a side chain to Bitcoin. It is a side chain because it works in parallel to Bitcoin. It's not on top of Bitcoin, it's beside it, which is very important because as a UTX model, you can basically use a Bitcoin wallet. It uses the same address like Bitcoin. You could use the Bitcoin wallet. And for me, this is very, very, very important, right? A big major selling point here is that it uses the Bitcoin model. So guys, this is obviously a big value proposition. And of course, in line with this UTX, it is proof of work. Guys, we're going to get into a little bit more. Let's continue. Learn about MVC, revolutionary public blockchain integrated with multiple innovations. Okay, UTX and proof of work. Okay, so this is what I was talking about. It's a proof of work model, which a lot of blockchains right now are gearing back to the proof of work. And there are a couple of reasons why. Number one, and I think it's the most important reason, is because of the SEC. Right now, the SEC is focusing on proof of stake models being centralized and, of course, could be deemed as securities. Proof of works with fully diluted, market caps. And in that case, all circulating supply being distributed to the general market through a very decentralized distribution. It makes it a commodity based structure, right? So proof of work is very, very interesting because it kind of keeps the project away from the radar of the SEC. So a lot of these layer ones are looking for proof of work, and of course proof of work has been a very bulletproof and model, and it's been around for a while. It's been tried many times, and it's been tested many times. So for us, proof of work is not a bad thing. Yes, there's the negative, quote unquote negatives, that maybe it takes up a little bit more power, but the reality is in the grand scheme of things of our traditional financial ecosystems, proof of work still requires less energy for it to run. So we got to compare apples and apples, oranges and oranges, and at the end of the day, proof of work is still a very sustainable way of record keeping with blockchain technology. So I like the idea so far. UTX being and proof of work being a very interesting value proposition, and taking the strengths out of Bitcoin, of its architecture, and using it in a system that uses smart contracts. So very bullish in my book. It's groundbreaking, high activity, high performance, low fees. I think one of its objectives is to bring it down to a zero fee, which of course is amazing, very, very great for the community. High level of decentralization. I have a bit of questions with regards to this, and we're going to get into that a little bit more. A little bit of a red flag that I want to bring out to the community here. Obviously, a little bit of transparency with regards to economics, tokenomics in general would be great, but the website doesn't offer too much, and we're going to get back to this decentralized concept. Right now, what the team is really trying to push is that they're embracing decentralization. Of course, MVC, MicroVisionChain, is a DAO. At its base, it's a DAO. It's a organization that is governed on the blockchain. Okay, so it's a decentralized organization with a layer one, and I think a smart contract technology. MVC aims to become a #1 blockchain compatible with 8 billion users and Web3 era. Okay, fine. And the MVC DAO, world-class organization, world-class blockchain, devs, SDKs, technical documentation. That's the white paper, if I'm not mistaken. Let's open this up. Hopefully we don't open up. We can open this up in a new tab. No, it didn't. So let's go back. If I can, I want this to be in a new tab. Where is the new tab? I don't get that option. Okay, it's okay. Learn about MVC. And let's see if we can get a little bit more detail. MVC features. Okay, decentralized, once again, robust, cross-regional, fair. Okay, a lot of language here that is very detailed. Okay, so let's keep that in mind. Let's see if it's in tune with this level of detail throughout the entire website. And we're seeing that there's a lot to offer here on this website. High performance, UTX, high concurrency model. Of course, we know that, but the speed is not there. But as a layer one and as its own blockchain, they're able to use the OTX model and speed it up, which is something that we have to understand. That the transactions rate is very high, which is good. Built-in native distributed ID. This is unique. They claim to be the first mover here, the first mover advantage in this type of technology, which, is a little bit complicated to explain, but what I took from it, it's a way of being able to track transactions by a specific user. Okay, so data points and things like that. Users naturally control their own data, achieve data interactions between applications, because it's meant to be a Web3 solution. Our data and the way we interact with these Web3 solutions, we can basically take control of our own identities, what type of information we share with these Web3 applications. Obviously, a lot of this needs to be in action to actually really see what it does with the application, real use case. But the theory right here sounds interesting, and they claim for this aspect of their blockchain, it's native to their blockchain. It's a value proposition according to them. So let's see how it works. Honestly, we need to see this in play, and we need to see real world use cases. Layer 1 UTX smart contract, again, a little bit repetitive here, and if you read this, a lot of jargon, a lot of words here are very high level, and if you're new to this space, you're gonna have to do a lot of research to make sense of all of this. Of course, I get it. MVC history, it's been around for a while, since 2021, but the biggest moves and leaps have been just recently, and you can see a little bit of momentum picking up in the short term. Why choose proof of work, guys? It's just because of, at the end of the day, decentralized security measured by efforts of attack. It's already been tested for so long already, and because of that, it's been showing some really good sense of security. So proof of work overall is a great, and of course that SEC concept. Remember that SEC concept. Why MVC chose UTX? Again, meta contract, UTX model, enabling MVC implement all smart contract applications with high performance, meet all business needs. So the speed and all of that good stuff. And you know what I really like the most here is that a lot of people, when they start thinking the fact that it is a smart contract, how does it compare to Ethereum? And that's the thing right now. As a competitor to the in the field, it is comparable to Ethereum. It is a smart contract platform that uses an architecture that is very similar to Bitcoin. So you're getting best of both worlds, a Bitcoin architecture type of build with smart contracts. Now, the question is, can you bridge to Bitcoin? And this can be done. And I just want to, throw caution here, is that Bitcoin does not allow smart contracts natively. Okay, so if you bridge this UTX model, their token or their contract to Bitcoin, you're going to lose the functionality behind their contract, because Bitcoin does not have functionality. It only has static content that's written on their blockchain, no ability, no function, right? So in this case, it's quite interesting. And then the question is, well, can we bridge over to Ethereum? It is not EVM compatible, so they have their own virtual machine for MVC. So you can't really, basically deploy contracts on Ethereum. But there is a bridge. There is a bridge that you can bridge over. So there's a lot of good benefits here with the UTX, but they still keep in mind the necessity to bridge over to Ethereum, which is the largest smart contract platform out there. So really cool stuff here. Why MVC in short? So this is a good little synopsis of why MVC is good. Of course, MICROVISIONCHAin, layer 1, UTX model, same structure as Bitcoin, same wallet address. Again, Bitcoin operation system. We talked about that. Proven security by the proof of work, permissionless. Okay, anyone can get involved. Best side of the blockchain, of course, taking the best out of Bitcoin and so on. This is interesting. BTC-Fi narrative. So getting into that Bitcoin narrative as assets enable BTC transactions. I think we're finding more use case for Bitcoin architecture. Bitcoin set the standard. We've used Bitcoin up until now for one use case, and it does it very, very well. Now, of course, through experimentation and through the stability that Bitcoin offers, I think a lot of developers are looking at scaling Bitcoin's technology to the next level, and that's why we're trying, and the market in general is trying to build smart contracts on Bitcoin or use that technology. And guys, it's a great idea. Honestly, I believe that would be Ethereum's biggest competitor, is to find a bulletproof way to scale Bitcoin's technology. TPS, very high transaction rate, zero confirmation, of course, ability to deploy NFTs and fungible tokens. Transactions go through instantly, okay, low latency on chain applications, okay, and this POB, proof of build. Guys, this is another let's say, consensus mechanism. Okay, it's a mechanism of which tokens are going to be distributed. Guys, we got to talk about this in a little bit more detail. I think I'm going to focus a little bit more here because, in my opinion, there's a bit of friction here with regards to the actual decentralization of this application, its transparency with regards to its tokenomics, and a little bit of a red flag with regards to overall exposure to risk here. So I'm going to get into that very shortly. Friendly cross-chain modular infrastructure, meta. Okay, so open, a lot of good stuff here. Okay, fine. Mission and roadmap. There's a couple of good things. This going forward. Bitcoin establishment of its own complete ecosystem and building an ecosystem on top of Bitcoin with basically, very similar to the Ethereum ecology. So again, being a competitor to Ethereum and providing a lot of good solutions on top of Bitcoin or on the side of Bitcoin. So good stuff. Second stage, transaction fees to zero. I like this concept. I would have liked some dates or some measure, some unit of measure to when do we expect this to happen? Third stage, Web3 business migration to Web3. So this is an important thing, obviously, facilitating the Web2 to Web3. And I feel like this is what the majority of their tokens are going to be allocated to, is helping their ecosystem grow. Okay, and this is very vague, guys, very vague. I'm not sure exactly what they're going with this. This needs to be rewritten or respelled out so that we can get a little bit more detail with regards to this end game here on the fourth stage. I'm not sure what it's all about. It's a little bit of a lot of nothing, basically. So that's my take. Obviously, maybe somebody else could, iron that out for the community. If you do, feel free to chime in in the comment section below. All right, let's get big. Let's continue. Let's keep on bouncing around here, and you can see this website right now. There's a lot happening. We're just tackling. I don't even know where we are within the structure of the website, and that's another issue. Honestly, let me go back for a second. The website, to navigate it, like I went in info. Where did I go there? Learn more. Okay, down there, but learn, maybe it's here. About, this is where we were. Let's go back to the info. We have announcements, exchanges. Let's jump into the tokenomics, early contributor, learn. We did that one, how it works. Those are all, this is the white papers. Honestly, the website does a great part picking apart the white papers to the point that I feel like maybe their website is a little bit too much, and it could be, cleaned up in such a way that it's just a face and a very superficial explanation to what MVC is about, and then leave their technical documentation, their white papers, to be a little bit more to have a little bit more of that juice, right? And it's all good with that. The white papers are meant to be extremely technical, but the website to be a little bit more scaled back is fine, and it could benefit from a bit more of a simplified version here on the website. So how it works, let's see what that's about. Most scalable, again, a lot of repetitions, major blockchain industry, again, the UTX, Meta ID. This is their thing. This is their bread and butter. This is their value proposition, to separate it from other blockchains, right? It already does kind of separate itself by using the UTX and the proof of work, but they are integrating this Meta ID that is unique to them, and this is their own innovation. It's basically a supports chain crossing, one Meta ID for all blockchain data, achieve data interoperability between apps, stop data monopoly, users truly own their own data, help build users-centered Web3 application ecosystem. Very vague. I need to see more as to what this is. Is it like, is it metadata? I have a feeling it is basically a user's ability to control their own metadata and what type of data gets exposed to different Web3 applications. Honestly, a little bit more detail here would be great. If this is going to be your value proposition, you need some more. Meta contract, UTX, again, a lot of repetition of the easy stuff. UTX model, again, and proof of work, all of this. Look at this, functionality with cryptos. Okay, Web3 application by buying and holding cryptocurrency. By the way, they do have an ability to stake and a lot of good ways of earning passive. Also getting involved and doing some transactions and other little tasks, you'll get rewarded. With proof of work, UTX mod, again, a lot of repetition here, guys. At the end of the day, this is something to consider. They should be amalgamating a lot of this information in a very simplified way. This is about their contributors. We're going to talk about their ecosystem and their partnerships in a second. Okay, so pretty good here. Not bad. We're going to keep on going, but you can see a lot of repetition. Let's go back to the tokenomics. Honestly, I feel like their tokenomics has a lot to say. And this is why I want to focus a little bit more there. Everything else is quite typical. The tech right now is very self-explanatory, except that ID, that meta ID, needs a little bit more there. Maybe some sort of dedicated video or something from the team that can be clearly understood so that we can understand. But this, for me, is a bit of an issue. Okay, so let's spell this out a little bit in more detail. You can see that, let's jump right into it. You can see that 65% of the token right now is basically held into the DAO. Okay, it's held into treasury. So 65%. And how it's going to be distributed is POB, what they refer to as proof of build. So basically, release 2.5% per quarter for all builders having basically every 11 quarters. So every halving, they're going to be releasing tokens as the ecosystem grows, as the developers build. So basically supporting the builders to grow their ecosystem using 65% of these tokens for that use case. Now, what bothers me is that 65% of them currently are in treasury. Right? They're in treasury. They're in a wallet that is held by the team. Now, okay, maybe not necessarily by the team because it is quote unquote a DAO, but how many members are in this DAO currently? Right, so that's a very questionable thing. And who are the members of the DAO? If the members of the DAO are all part of the team or very close to the team, you have a level of centralization here. If 65% of the tokens are held by a handful of people, and for me, that's a very, very red type of thing. Like, you got to be careful here. Red flags everywhere. 100% of space. They say all the tokens are distributed by workload. Okay, like what? No pre-sale. And no initial exchange offering. Okay, they're only right now listed, I think, on one exchange, which is MEXC. We'll take a look at that in more detail in a second. But you can see 65% held in the DAO in treasury to be distributed later. And they're voted. How these tokens are distributed is voted by MVC Labs, which is the DAO, right? So one vote equals one, basically one token. And for me, or 1%, 1p, I'm not sure what even that means, but at the end of the day, 1 for 1, if you're a holder, you're going to get one vote. And for me, that's a little bit difficult. It's 65% is too much to be held in a DAO, and for basically allowing these token holders, which again, as a DAO holder, the more people that hold, the bigger the wallet, the more voice you have and the more control you have. So let's say somebody holds, let's say 50% of those 65% of that 65%, that holder of 50% of the tokens is going to have a huge say in how those tokens are distributed. Guys, that's not decentralization. That's very, very, very scary, right? So we got to be careful here. A little bit more needs to be explained by the team on how this is being secured. I know there's vesting periods. I know the treasury is locked for certain periods of time, I think till 2025, but nonetheless, it's one wallet being held in treasury. For me, that's an issue. We need more explanation here. And then the rest, 35%, basically is being distributed through mining. Again, having 11 quarters, each quarter being about 1,000 days. So releases 25 spaces every block, having around 11 quarters. So that's fine. The 35% is fine. It's very Bitcoin-like. But the other 65%, although it is a DAO and although it is, based on a DAO consensus and, voting and all of that, guys, for me, it's a little bit, iffy. So for me, this is what I'm watching right now. Again, proof of work and proof of human work, which is, I like to call it proof of build, because as these builders are building onto the ecosystem, they're going to get, funding and rewarded, or in this case, given tokens to help them or incentivize them to build more, which is a good thing, no doubt. But again, I don't know, holding all those tokens in one wallet, speculative for me. What is the allocation for space? Early builders. So if you notice, the early builders, people that got in on day zero, are still holding some of those tokens. They're vested as well. They're not going to be selling until I think 2025 in September, something like that, which is good. But the rest of them, you see the purple zone. The purple zone is the proof of work, which is the amount of tokens that are going to be released through mining, and then the DAO. Look how much the DAO holds. It's significant, guys. And again, there's no transparency to DAO. And I read on their white papers that there's individuals on the team that are getting paid $5,000 a month. So based on the treasury, and guys, again, this is very, very. This sounds like a lot of liquidity being held up in some sort of control structure that is not really decentralized. So be careful. Okay, so we got to get into obviously. There's always more depth. There's always more explanation. I do encourage that the MICROVISIONCHAIN team talk about economics. They're very, very technical. You know, I've been reading and watching and doing research on the team and the people that speak. And I bet you the person that built this website, or at least the language on this website, is part of the development team. And that is not always the best person to communicate. They communicate in high-level tech words, of course, and jargon and technical language and even grammar and all of that. And it needs a marketing team. This needs a marketing team to make this simple. And obviously this needs to be basically clarified, and, you know, a lot of clarification to offer to the community. What are the funding rounds? Fair launch. Okay, fine. But fair launch of what? Right? These tokens that are in the DAO have been already they're already in distribution. And if you look at CoinGecko, they deem to be not in distribution. But if you go on CoinMarketCap, they are in distribution. So there's a little bit of discrepancy. These are actually minted tokens that are in a DAO right now. So we got to be very clear that there is no ICO in the fair launch, but the fair launch puts 65% of the tokens in the DAO. So I don't know how fair that is. Establishment, not node operation, an exclusive operation. Oh, I don't even know, guys. Language. Stakeholder economics, something to take. Got to look into that, guys. Right now, red flags, a bit of a red flag there for me. And again, value incurs, rewards is distributed to public goods. Open source software, value, open goods. Again, a lot. What is all of this? You got to be clear. Too many paragraphs, too much jargon, but nonetheless, this is what bothers me the most here on Space, is what's going on with this token distribution. Okay, let's continue. And if we need to touch base back there, we will. Scales. Okay, a lot of technical stuff if you want to get into it. Solutions. Again, the meta ID. Again, there's not a lot in here. There's a lot of technical stuff. Look at that. Introduction, Meta ID features. A user can use Meta ID to enable applications with only one private key. Data of different protocols can be combined and reused under Meta ID association. Like these words, like what is a lot of nothing. So the work of Web3 application development is greatly reduced. What is all of this? I read this 10 times and I still feel like I'm reading this. I'm a developer by trade. That's what I know. I'm a programmer, and I would have preferred even code, right? And at the end of the day, guys, there's not enough here for a novice investor to get in and get bullish on what Meta ID is about. Okay, so we need a little bit more clarification and actual use case, maybe some sort of diagrams or something like that, or a little video showing exactly what it does. And the GitHub is definitely there. Miners, if you want to become a miner, it's definitely possible. They provide all the support, mining instructions, download node software, join the community for support, all that good stuff. And you can see that there was a little bit of information with regards to the DAO, and I saw it somewhere, but right now you can see the transactions of the mining, which is cool if you want to see that. Let's jump right into the ecosystem. So the ecosystem is doing decent, and there's one bullish aspect of the ecosystem that I really like. Number one, the wallets are great. You got 3 wallets there. It's very supportive to the Web3 community, which I like. Browser extension. This is what we want to see, right? Then we have show 3, which is NFT, Universal Web3 social application, meta name, and their DEX. They have a DEX, which is good. This is keeping up with the trend of, the layer ones. All layer ones need a DEX right now. If you want to be competitive with, Avalanche and of course Ethereum and Cardano, even Cardano, if you want to keep up with Cardano, you at least need to have a DEX. So that's good, but there's not much liquidity in there. I think there's about $1,200 in that DEX, but it's not a lot, but at least they have something going for them in the meantime. They do have a bridge to Ethereum, which is also available, and I'm going to see if I can find that link as well. And they have dollar space and some other stuff. Okay, so pretty good. Ecosystem is growing, and infrastructure, decentralized social network, nodes, MVC, blah, 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 good browser tools and all that good stuff. So for me, that's good. That's great stuff. Now, there was another thing that I wanted to show you guys, the DAO, MVC DAO. So a little bit there, back to why a DAO. They want decentralization, DAO constitution. So there's a level of trust through their constitution, meet the world community. You can check out their socials, and this is their treasury amount. Look how much space they have in there. It's a significant amount, very, very significant. Okay, so that's something to consider. And again, what's next? Facilitating writing more complicated. Yeah. You guys read this if this is what you're interested in. Short-term development for plan for MVC. There's a lot happening in this DAO, and of course you can vote if you are a DAO member. Now, I clicked somewhere here before. I think it might have been here. Let me see if it is. Yes, there's a couple of transactions already in the DAO. Number one, the Genesis event, when all the tokens were put into the DAO. You can see how many, quite a few, okay? And then they made a payment to MIT, and that was it. MIT EV. I don't know what that's, some sort of transaction for something. Let's see if I scroll. Oh, there's more. MIT event, and then they have one for initial contributor rewards, early contributor monthly release. So you can see how money, Mexi Kickstarter event. So you can see how tokens are being released out of the treasury to get things to happen, which is a good thing. At least there's a level of transparency with their wallet. But again, significant amount of tokens in that wallet. But they are distributing these tokens based off POB, proof of build, and I guess based on how the DAO deems it necessary. Okay, so the DAO, again, a decentralized organization, they can vote on how this treasury gets distributed over time. So keep that in mind. Okay, so let's continue. We talked about the DAO. Let's look at this bridge. So they do have a bridge. Again, like I mentioned, it's not a Bitcoin bridge, although because it is UTX, it should be able to bridge over to Bitcoin, but you will lose functionality. I'm wondering if they have any plans onto how. My biggest question is this. Let's say that you had a smart contract built on MVC and you decided to bridge it over to Bitcoin, and you lose the functionality, which is understood because Bitcoin is not a smart contract platform. But then what about if you bridge back to MVC? Does the contract get reinstated? That could be a very valuable value proposition here, because at the end of the day, if you wanted to get onto the Bitcoin network for whatever reason, just for HODL purposes, and then bridge back, that might be an option, right? And then still keep the functionality of MVC. That's something to consider, right? So this bridge right here just allows you to bridge from MVC to Ethereum and Ethereum to MVC. Because it is a smart contract platform, they basically created a scenario where they can translate any contract back and forth into both chains, which is very useful. Now, just keep in mind, a lot of the bridges are, points of weakness in a lot of these ecosystems. So I'm not saying that it is. I'm not trying to spread any, any FUD here, but at the end of the day, they are generally, you can see that they're weak zones. They're hotspots for, exploit. So be careful here. I'm not sure what is going on here, but it is a feature that they do offer. Okay, let's move on. What else do we have? We covered the website pretty thoroughly here. So we talked about the ecosystem. I wanted to see where I could find, because Binance is all up in this. They are the VCs behind here, as far as it might be on their white papers. Let's go see. Let's see what we can find on this is their Twitter. We can go check out their Twitter in a second. This is their white papers, very, very technical stuff. And you can tell that the team is very, very talented. And speaking of the team, while I have this up on for conversation, the team is not 100% fully doxed. They do make a lot of public events and public statements on YouTube and on different, platforms, but they're not doxed, meaning you can't find specific information as to who they are and their current occupation and their educational background or their work history, especially on LinkedIn. What I found to be a little bit problematic is their LinkedIn account, the Microvision is basically blocked. You won't be, it's not open to the public. So why is it not? They should make it very transparent. If they're in a decentralized environment that they want to make very open and transparent, they should make themselves very, very transparent as well. Now, I'm not saying the entire organization needs to be transparent, but the lead team needs to be transparent. Okay, so you see there's lots of technicals here, guys. Lots of technicals happening here. Okay, lots. If you want to get into a lot of the details, look at this, how it works, input, outputs, basic computer science, type of thing. The IPO model, of course, if you're into comp sci, you get what I mean. But a lot happening here. Like, this is like grade 11 computer science type of thing. Okay, so really interesting stuff if you're interested, but there's very, very technical stuff here if you're interested in getting into exactly what the level, and it does a great job comparing the UTX model, the previous version, or how UTX works, and then how they take UTX and make it their own, and how it improves the UTX model. So that's a good thing. Okay, so let's move on. There's not much more that you can get. You can get a lot of the basics from their website, which I find to be very interesting. Let's go back to the website for a second before we wrap it up and get to my verdict. I feel like we need to see if there's any how MVC scales, low fees. Again, if you're interested in that, how it achieves it. Runs Turing completes technical documentation. I wonder what's that. Is that the actual white paper, or is this another documentation? More technical English version. I think this is the white paper, the mechanism. And if you into this language, which I think could be some sort of Chinese Asia language, go check it out. Of course, there's a lot happening there, and I think that's the link to the white papers. What's going on their Twitter account? Space. Let's see. MVC space. Right here, blockchain, lots of things happening. Token, Singapore, Imagine, proof of work, UTX. This is the thing. This is the bread and butter, the UTX model, Bitcoin's architecture with proof of work and smart contract. That's it. That's amazing. Thorough research and fundamentals. Decided to add space to my long-term portfolio. Good for you, Joey. Good for you. There's a lot of good stuff here. Go check it out. And obviously, there's a lot of engagement here. I would have liked to see a little bit more. I did a little bit of research on their overall engagement, and I think it could be a little bit more. And given the fact that we're in a bear market, their engagement is quite stagnant, but at least stagnant. It's not down. So that's pretty good. At least they're getting a little bit. What's going on here? What are they talking about? It's goal scaling Ethereum. So in the last bull one, Matic was to scale Ethereum. Space is to scale Bitcoin, but it's not really scaling because it's not a layer 2, it's a side chain, so it's a little bit different, but I get the correlation. Really good stuff. Okay, a lot of engagement here. I think I've seen her on some videos and things like that, if I'm not mistaken. Ambition, so good stuff. All right, guys, let's go right into some of these technicals. Guys, at the end of the day, my verdict that right now is obviously a bit mixed. We'll get right into that right now. All right, so as usual, I do prepare these infographics for you guys. Feel free to go check those up. They're on the socials, of course, the Discord. I'm going to post this on the Discord so you can, casually go through it yourselves and, kind of, pick out the information as you please. But we're going to go through it just as a quick wrap up. Ecosystem, got some wallets happening there, some good stuff with regards to its ecosystem wallets, Web3, the space dollar, Show3, the infrastructure projects and browser tools. So they're a good start from being a smaller project. It's not not the smallest, it's not the biggest, but you know, for being a small project, it is definitely working towards building its ecosystem. I give it 9 out of 10, of course. The utility, earning rewards by participating on the network and staking and voting in that DAO. So the utility is very typical of their tokens. You got to admit, very, very typical. You participate on the network by, you know, doing some random tasks and staking and all of that. You get rewarded. So there's nothing unique as far as its utility for me. Very typical, so 10 out of 10, that's fine. Roadmap, this is what I liked. I like the fact that their stages were very clear. BTC Fi, of course, getting into more Bitcoin application and the transaction fee to 0. That would be awesome. Obviously, making it free to transact. Web 2 to Web 3 migration, getting all those businesses that are in Web 2 translated onto Web 3. So I guess what I'm thinking is that all that DAO, that proof of build scenario, is going to incentivize a lot of the developers to create Web3 migrations. And for me, of course, the best incentivization is token, right? Giving funds, monetary, you know, benefits. That's all really that can be done here. However, the way the tokens are distributed obviously leave a little bit of room for consideration. So we'll get into that. I give it 9 out of 10. I would like to see a little bit more transparency with regards to timing, and the fourth stage need a little bit more clarity. The team itself, not fully doxed. However, what I was able to dig up on the team, these are their names: Dr. Hu, Mr. Wang, Mr. Chen, and Miss Zhang are not fully doxed. However, seem to have many years of experience, between 10 to 20 years apiece, and all in the tech industry, obviously computer science, computer engineering, all that kind of software engineering. So it's good. It's definitely good, but a little bit more formal doxing would be great on LinkedIn or something like that, so we can see what exactly they're all about. Okay, their socials, at least their socials, you know, are stagnant. Let's put it that way. It's not a good thing always. If they were stagnant in a bull run, I would be very, you know, critical, but stagnant, going sideways and kind of holding up and getting actually in the last month, in the last 30 days, they got 4.3 thousand followers and they're at 13,000 followers. So the reality is in the last month, they've been growing, but overall, in general, their engagement is pretty stagnant. So, okay, I'll give it 7 out of 10. I've been covering a lot of deep dives where the projects, actually, the socials have been tanking. So for me, this is at least a beneficial thing. Sideways is always good, especially when there's negative momentum. Sideways is okay, right? So not bad. Tokenomics, guys, I give it a 3 out of 10. I'm not really feeling it. They got to give some clarity. About 68% are in circulation right now. Okay, 65% are in treasury, and the rest are in mining. So, like, guys, the rest of them that are geared towards getting into distribution are just mining. The rest of them are in treasury, because they are holding a good portion of them that are already in circulation in that DAO. So for me, that's problematic. And the way they're being distributed is through proof of POB, proof of build. So I don't know, you know, how this is going to work. I don't know how the general market's going to accept this type of tokenomics. I really don't like it personally. It seems like a little bit skeptical. Is this a long-term investment? I don't know, guys. We'll talk about this more in a second. Partnerships, I like it, guys. I like it. I was able to find out what they're all about. Chainlink and Band Protocol, they use their oracles to access real-world data. Great. These are industry standards, especially for smart contracts. Stakefish for staking services. Obviously, they offer staking services, and you can receive passive income. I think right now their APY is about 20%. It's a little bit high, but you have to keep it locked up for about 30 days or so. And for me, of course, that's very typical. When you see APY that is a little bit too good to be true, be very careful. But this is crypto, guys. Sometimes we do get APYs that are very, very high. So I give it 9 out of 10 because of the Binance Lab. Okay, that for me is really, really good and really interesting. Binance is all over it, and and at the end of the day, having them as a venture capitalist means that they could be listed on the Binance exchange at any moment. And if that happens, you can expect volume, you can expect hype, and expect everything else that happens when a small project gets listed on Binance. So right now they're listed on MEXC, and they are maybe, just very maybe, Binance possibly. So pay attention to that. Okay, so exchange is pretty good. Now let's get into a bit of their token. Obviously, their ticker is Space. Right now, they're about $13 and change. When I covered them yesterday-ish, they were about $14. They've been dipping down just a little bit. We're going to talk about the price action in a second, but their market cap obviously is coming down as the price does come down. It fluctuates. I think it's at about 200 million more or less. $200 million market cap is a small project. Okay, it is not a mid cap, not even close there. It is a small project. It's not a micro cap. It is small. So there is some room to grow. Could it get to $1 million? Very possible. Very possible. If everything goes good and this project holds up and everything, their aim is to get to $1 million, very possible. Okay, so and it's very modest considering it's a layer one, and its current value proposition is quite unique and it's very competitive. It's what the market is kind of looking for, right? So what I don't like is their trading volume. It's very, very low considering their market cap. It's only 1.14% of their market cap. So there's not much trading volume there. I don't know why. You know, that means buying and selling is not happening. I question the liquidity because of that. It's only listed on MEXC. So we're not getting a lot of volume on MEXC, which, you know, this is a problematic thing for early projects. You need the liquidity, you need the ins and outs, and if you don't get input and output with regards to volume, you get a very stagnant market. So we want to be able to trade this thing with some volatility, and we need some volume. So trading volume right now is very weak, in my opinion. Supply 4.3%, 14.3 million space currently is in circulation, while the max supply is at 21 million. So you know that fully diluted right now is at 300 million, and it has some room to grow, of course, as more tokens get in distribution. But 300 million fully diluted, guys, it's still very small. It's still very small. What about a $500 million market cap, guys? That's still, you know, mediocre-ish small. And for me, $1 million market cap for a layer one is very, very possible. Okay, so we're gonna look at my overall consensus here. The overview of MICROVISIONCHAIN. Obviously, it is a blockchain that aims to provide smart contracts using the Bitcoin UTX model, guys, and proof of work, and some other value propositions like their Meta ID and so on, to actually give the blockchain models, the Bitcoin model, some better use case. Okay, now let's continue. My verdict. These are some added points. So it allows smart contracts again, UTX, proof of work, and again, to repeat, it's something to secure themselves from the SEC. You know, not to be deemed as security. Proof of stake tend to be deemed as security, so be careful there. Strong value proposition, improving on ordinals. The whole concept of an ordinal was great. A lot of people were bullish, but it had issues because it created congestion on the Bitcoin network. Now, what these guys did say is, you know what, I found a solution to this. Instead of building on top of Bitcoin or within or using the Bitcoin blockchain, what I'm going to do is create a side chain and basically run alongside and make it compatible and so on. So this was good. So you can use the Bitcoin wallet, and of course there's that Ethereum bridge so that you can bridge those smart contracts onto Ethereum. Bullish, good stuff there. Tokens are distributed in a way that threatens decentralization because of the DAO. I don't like that 65% that are held into the DAO, and the whole way they're distributed is very vague. Trading volume is very low. Again, as I mentioned, they have made the public appearances. The team has made public appearances, however, not fully doxed. They need to be fully doxed on LinkedIn, as their profile is blocked and not made to the public. Not open to the public means that either they have something to hide, which I don't think, or they're just not ready to be fully transparent with the community, which for me keeps me reserved, given the fact that the team or the DAO is holding 65% of the tokens. Why not being transparent? That's more of a reason to be more transparent. Roadmap is good. It needs a little bit more clarity on dates. Website is overly complicated, a lot of jargon, a lot of detail that could be reserved for the white papers, and the website should be just a little bit more clear for us to understand, especially newcomers to the space. As retailers enter the market, they want a quick synopsis as to what are the quick value propositions and why and how they work. Okay, so you got to kind of, you know, a lot of tabs, a lot of extra links that are not necessary. Socials are a bit stagnant, but fine within the 30 days. We're seeing a lot of good volume and engagement, so not bad there. Partnerships are good, particularly the Binance Labs. For me, having Binance as a VC could be a very positive thing. Now, maybe it could be a negative. You know, Binance has been, you know, under the microscope for the last little while, but is it a positive? I think it is. They have the liquidity, they have the connections, they are based in Asia. I'm not sure exactly, but I think in China somewhere. And we know Binance right now is doing well in that part of the world. So for me, that connection is a good one. Now, finally, what do I expect for this price, for the space price? Honestly, the price for me, I give it, first of all, my rating, I give it 7 out of 10. Now, the only reason being is the clarity about the economics, right? The tokenomics right now are a little bit whack for me. I want to know more about what's happening with that DAO. That's a significant amount of tokens being held up in the DAO. Now, I know they're vested and I know they're locked up for a certain period of time and so on and so forth. But nonetheless, it's a little bit too early on for a small project to be holding such amount of tokens in a DAO, in my opinion, and how they're being distributed. But nonetheless, let's say that this project does achieve its goals and where it needs to go. We start comparing it to other projects, and that's potentially the best way to look at, looking at other projects and how they compare. And right now we can look at Matic. Matic is a layer 2 solution for Ethereum, improving its scalability and adding features. Obviously, Ethereum was already a smart contract platform, but Matic came out improving its scalability. And, it did very well and its market cap is large. And I feel like maybe Space is trying to be a very similar thing to what Matic is to Ethereum, right? So providing more features onto that blockchain, but not as a layer 2, but as a sidechain. And if that's the case, I can see a 30x easily, right? I can see a 30x. And we know that Matic has done very well, right? So maybe hitting about $442, I think that's very, very ambitious, right? And of course, even Space could be even considered a competitor to Ethereum in general, which could be a larger market cap. But we got to take it easy because in this bull run, we only have a certain amount of time, right? A certain amount of time means that eventually we might hit that bear market. This thing might take a dip. And then in the next bull run, in another 4 years, we might see Space get another leg up. So everything happens in waves. And I feel like in its first wave, I can potentially see the price target hitting about $100, which is at about, a $1 million market cap, which is at about a 5x. That would be very healthy and very modest, right? Considering that it hits its targets and these tokenomics actually play out. Now, if you look at Stacks, which is a very similar project building upon the Bitcoin, the Bitcoin narrative. If it does a 4x, it would be about $57. I still feel like it do a little bit more than 4x in my opinion. It is a larger cap project, and I think that it could reach $1 million market cap given the fact that it is a layer 1. So my rating is a bit mixed. Honestly, I feel very compelled to give it a higher rating considering that its value proposition is great, but its tokenomics, guys, is very scary. Guys, I hope you appreciated what I had to offer here. Let's get right into the price action, guys. I know you want to talk about charts. Let's go see what I think about Space and what it could do with regards to price. It has been pulling back in the last little while. It did pull back significantly, and that's the opportunities that we look for. What kind of retracements are we looking at? What kind of opportunities are we faced with to buy the dip? Let's get right into this quickly so that we can come up with a plan. A bit of a retracement here. Swing low, of course, to swing high. And we get a retracement right now to the Golden Pocket 618, which statistically speaking is a great place to put a bit of risk in, right? But we have no confirmations. We're still creating lower lows and lower highs here on the 4 hour. We are approaching that level of potential support as we get closer to the 786 retracement, which for me means that if we get down to this level, we could be producing a nice head and shoulders, inverse head and shoulders, W formation or something like this at this horizontal level of support. But are you going to nickel and dime for a few percent? I would say that MICROVISIONCHAIN right now has dipped down significantly and is currently looking for some support. We did come down to oversold conditions down here. We got a nice rally up off of this bullish divergence. We did get the follow through. You can see that. So let me kind of pencil this in. RSI momentum is going upwards while the price action is coming down, which class A bullish divergence to the upside. And then we got the follow through up, which is great. Now we got a bit of rejection based on the previous high. Previous high is technically a slightly higher. So let's put that in just to ignore the wicks. So we understand it is slightly higher. And you can see that the overall momentum on the RSI here on the 4 hour is slightly lower. So again, class A bearish divergence on big picture, because this divergence will be playing out also on the daily time frame. Okay, so that's something to really consider here. On the daily, we're getting bearish divergence, as can be seen right here, right? And then we are creating a slightly higher high, but a higher low, but getting a bit of support would on the golden pocket 618 would be great. So what is happening here is that we could be potentially creating an upward sloping wedge as time builds, a bit of a consolidation here, then an eventual bounce, and getting to higher levels might be in the works, right? But for me right now, let's stick with the 4 hour, because I feel like there's not enough data to really, play on the daily. I feel like if we do get some support here, guys, we could be in for it for another attempt at the highs, but I would be quick to take profit at, again, at a retracement level that is probably at about $16.80, more or less right here. This for me would be a great opportunity if we happen to get a nice bounce here, a nice opportunity to DCA. And if we come down even lower, you can see that we potentially have a bit of a gap, especially on the daily. You can see that there's a bit of a gap down here, a weak spot. We do have another level of volume here being built, so I want to make sure that I address this as another opportunity for DCA. A lot of the times we forget the fact that we can DCA multiple times into price action. We don't have to only have once or twice or even 3 times. You can do it many, many times and slowly scale in as the price action comes down. But the most important thing for me to scale in is to see that the RSI fully resets, getting into oversold conditions. Are we actually going to get here on the 4-hour time frame? It may be that we don't. It may be that we don't get oversold. We got oversold here. We got overbought. Are we going to get oversold again? I would love to see that happen to get in with confidence. But if we don't, we might get a bounce right here and not even get oversold and get in for a nice push to the upside. So this is about, risk management. And at the end of the day, when you're thinking of getting in a risky scenario, there are a couple of ways that you can get in with mitigating risk. Number one is DCA. Get in with a small amount. If it bounces, great, you have some exposure. If it doesn't and it continues coming down, you can put a stop loss, or you can double down and scale in as it comes down and build a position all within the zone with anticipation of a rally up. I still feel like the 4-hour getting oversold would be absolutely great, and the risk to reward ratio would be really healthy in this case. And you can see that we're slowly trying to lift up while the price action is coming down here on space. So I feel like we're trying to hold and build some support. Now it does look like a bit of a cup and handle, inverse cup and handle, cup and handle. You can see that very, very clearly. The breakdown would take you down probably to the point of control at about $11. So be very careful with this ice line, because as we speak, we are getting some sort of cup and handle scenario or shoulder, head, shoulder. You can kind of see here that it's kind of playing out as a pivot point coming out of this overbought condition here on the 1 hour. Eventually, we're getting this divergence follow through to the downside. So if we get support, great. If we don't, we're breaking down. That's why I like staying in the 4 hour. My conviction is that eventually we should be going long, but I'm not convinced just yet that this is the absolute bottom. So we need to build a bit of confidence here on the 4 hour for a little, confirmation of structure. Right now, we're still making lower lows and lower highs. And this is, excluding wicks, you can see that there's a bit of a downwards channel. Let's create a higher high. Let's make a higher low. Let's let this 4 hour build. And in fact, I'm compelled to get into the 1 hour, because the 1 hour is going to give us the opportunity to get into a better entry. But you can see that we are still downward sloping, lower lows and lower highs. We need a higher low or a lower high or something to give us an idea that maybe we're breaking structure. A nice higher high would be great right now to break previous highs at about 1453, and then a back test and then a confirmation to the upside for a nice little bounce. So I know I'm bouncing around right now on time frames, but you can see what's building here is that we could be potentially getting some support very soon. The question is, are you willing to take a bit of risk while the RSI is not completely oversold? The MACD is looking really good. Nice bullish divergence to the upside right now being built. But the EMAs are not crossing just yet. You can see those EMAs are still facing down, but the clusters of histogram bars on the MACD are upward sloping while this price action is coming down. So that is the class A bullish divergence on the MACD. Potential good opportunity for DCA on MICROVISIONCHAIN. Okay, so DCA now, if you get a bit of a position, great. If it comes down to lower levels, I would be DCAing at 11 and I would be DCAing at about 9.28. If it hits any of these levels of support and bounces, it's okay, guys, because you have skin in the game, and then we'll be talking about profit taking. All right, guys, thank you for stopping by. If you appreciated what I offered you here in today's deep dive, do the channel a huge favor and slap the like button. It does really help out with that algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to join that Discord group. It's a great community, great place to get a lot of alpha, good trade setups, and all that good stuff. Take care, guys. Have a good one. And don't forget, buy the dip.